Hi, good morning, everybody. How are you all doing today? I'm extremely excited to be talking to you guys about the moving average, convergence, divergence, and the histogram indicator today, which will be part of lesson number 13. So I hope you guys have enjoyed all the beginner material, which was ranging from lesson 1 all the way to lesson 10. Now, lesson 11 to 16, or to 17 rather, will most excuse me there, I'm having a little bit of trouble speaking right now. Let me just have some water quickly, I guess. All right. So lesson number 11 to lesson number 17 will be more so the intermediate level. Make sure you have a very good grasp on the terminologies and on the basics and especially the fundamentals of lessons number 1 all the way to lesson number 10. The intermediate stuff is the ones you really want to focus on because if you focus on these ones, I can guarantee that you'll definitely increase your probability of being a successful trader. So what we try to do is we try to equip ourselves with a huge arsenal of tools and of strategies. And we learn these different indicators, and we also learn about what they do, how we can find confluent reasons to enter a trade, how do we increase our probability of it leaning more towards one way than the other way. And that's where these technical analysis tools and indicators will come in, right? So lesson 11 was great. I'm sure that you guys thoroughly enjoyed it, or I hope you have as well, right? Common patterns and the breakout strategy. It's definitely one of my favorite strategies to use. That one was a really detailed video of. I hope it was detailed actually for you guys because I put a lot of effort into it, right? I want to make sure that you guys understand that very well. Moving averages. As you guys saw, the swing strategy was beautiful for identifying short term, medium term, and even long term bull or bear markets as well. And I think that if you guys add the moving average strategy into what we'll be learning today, which is the MACD and the histogram indicator, you're going to have two really powerful tools to increase your probability of finding more successful trades and knowing how to actually take these profit, right? So, one thing that I wanted to define, right, you guys have to understand the difference between a swing trader and a day trader, first of all. If you are a swing trader, it basically means you're swinging your position. So you're holding it for longer than, say, a few days, even up to a week, even 2 weeks, right? It all depends on it. Whereas a day trader, what they try to focus on is they try to focus on capitalizing with the volatility for intraday. So if they're focusing on intraday, then they will try to look for these high volume, high volatility with lots of RSI movement, especially because we want to capitalize on heavy volatility. So whether you're using a swing strategy or a day trading strategy, honestly, it's all the same, in my opinion, when it comes to moving averages or um, moving average for lesson number 12 here that we covered, right? Or lesson number 13, which is the MACD, which also uses moving averages as well. So I think that you guys are going to have two really good tools. And then when we add in RSI, Fibonacci retracement and Fibonacci extensions, that's where you guys are really going to start excelling when it comes to finding even higher probability trades and setups with really good risk to reward ratios, and you're most likely going to nail these targets a lot more than you might realize. You just don't know it yet, guys. That if you guys get through these 17 lessons, put in that hard work, okay? You guys have to remember that life is short, guys. Like, it's an incredibly short time span that we're here. And you have to ask yourself, are you worth more than what you're doing right now? Are you better than that? And I think that we're always in a place where we can feel complacent, but we know that deep within ourselves, we can do and achieve a lot more. We want more in life. Now, don't get me wrong, guys. Like, money does not make you happier, okay? It doesn't make you happier, but what it does do is it alleviates a lot of the burdens of modern day society. And I think that's one of the best ways to put it, right? If you can alleviate a lot of the stresses of everyday things, then you have more time to focus on things like yourself, to make yourself happier in general. So, sure, happiness is not derived from money or vice versa, right? It's not a means to an end or an ends to a means, but it does allow you to have a lot more freedom. And with a lot more freedom, you can find happiness elsewhere outside of money, right? So it's just kind of a bonus to, once again, alleviate some of the stresses of modern day society. And it kind of sucks the way society works, you know? How we're in a very materialistic and capitalistic world right now, you can say. So let's get into this, okay, guys? I want to make sure that you guys are learning the strategy properly. I want to make sure you guys understand these strategies very well as well. I want to make sure that you guys are equipped with tons of tools, guys. We're talking tons of tools, okay? Because I want you guys to know these tactics that I'm using. You guys I don't know if you guys have been watching some of my tweets lately, right? But some days my profits are, when I feel like tweeting my profits, which is really not that often anymore because people don't like it, right? And I'm more so saving my live trades for lesson number 17 right here. Lesson number 17 right here is how I'm teaching you guys my specific strategy. So I'm not posting a lot of live trades right now because people don't really like it a lot. They see it's kind of bragging, right? But as you guys know that my strategy works really well, and some days you guys are seeing me earn like a few $1,000s, right? With very relative ease. Or other days I'm making $180 or something to play each game of Dota. Really, I'll look for a trade setup before Dota. A game of Dota gets found. Usually it takes about an average of an hour, you can say. By the time my game is done, my position's closed already. So you guys can also employ these tactics, and I don't see a reason why it wouldn't work out for you as well. So let's get into this, guys. I'm so excited to talk to you guys about MACD right now, and especially the histogram. As you guys notice, I reference the histogram a lot, okay? The histogram, I love it. It's one of the best tools in the world, guys. Best indicators. It's a real-time momentum gauge. So let's get into this right now and open up some of the charts, shall we? So let's get started. We have a BTC chart opening up right now. And once again, I'm really excited to talk to you guys about this because I firmly believe that if you get a good grasp on the MACD, you get a good grasp on RSI, moving averages in general, Fibonacci extensions, Fibonacci retracements, you guys are going to have so many tools up your sleeves and just so many weapons that you're going to have this arsenal full of skills. And eventually, when you guys take it slow, remember to take it very slow, right? You do not ever want to be one of those traders who says, I'm going to play bigger because I think that I can win more and I want to make more money. And you definitely don't want to be one of those traders who says, crap, I've lost a lot already. Go big or go home. I'm going to play even bigger to win it all back. That's something you just want to separate, okay? You don't want that. Just throw that away. Throw that concept away. Don't ever think to yourselves for a moment that you need to play more to win more. Okay, you guys play for a few reasons, right? One is to get valuable experience under your belt. I personally have made probably over 10,000 trades, I'm guessing, right? Because some days I do average about 20 trades a day over 2-3 years. That's, say the 300 work day, right? I've probably made about 10,000 solid trades, and a lot of them were losses, right? Well, at the beginning, a lot of them were losses, and it's only until I started losing a lot, and that's when I started to learn these valuable lessons. So please play for these valuable lessons, just to have them under your belt. Play for the experience, right? You play to lose, basically, okay? You have to play to lose. I'm sorry to say that, guys, but you play to lose at first because that's the only way you can learn, right? You cannot ever just shoot up to become a superstar and become a gun at trading. It's not until you have lots of trades under your belt and you know how to refine your strategy and you know how to mold your trading style that will match your personality. Okay, you guys need to understand very, very clearly that the way that we trade is clearly based on our personality. Our personality, unfortunately, matches and it clicks with the way that we trade. So you guys are gonna find out who you are very, very, very quickly. Okay, you're gonna find out what kind of what kind of sissy you might be, just as a joke, right? Because we all know that it requires you to take a lot of pain, lots of pain. There's going to be times where you're like, oh no, oh no, oh no, I'm going to get stopped out. Should I just take my stop loss? Should I just cut my losses now? It's going to hit it anyways. There's can you handle the pain? Do you know how to stay in the game? That's the important thing. So what we're trying to do once again is equip you guys with tons of tools. This way just throw it out the window again. You remove those emotions from trading and you stick to strategy. You stick to proven formulas that work, right? You stick to things that show proof in the pudding, like these trades of mine as well, right? And you stick to things that have been known to work for other people. And then you look at people who have been successful. You look at people who have failed, especially as well. The people who have failed are the people who are ultimately going to be the most successful because they have learned how to mess up so much that they should know how to improve to become better traders, right? And I kid you guys not that don't be discouraged, please. I have lost an incredible amount of money trading. I actually can't wait to get it audited for the 2017 year, like all of my trades, which I plan to do very soon. So, yeah, it's going to be a lot of losses, and it's going to be exciting to also know how much I've won in general, right? Because those losses, guys, I'm so grateful for them. I'm so grateful for them because I know for a fact that they have made me into the trader that I am today. And I know that I've got a lot of work still. I still catch myself making tons of mistakes, and you guys are going to catch yourselves making lots of mistakes as well. But please make sure you understand that with these mistakes that you're making, they do not have to be expensive lessons, right? They can be very short and cheap lessons, but they're going to be very valuable because they didn't cost anything. So please, once again, do not make the mistake, guys, of thinking that you need to play more money to make more money, or you get into that position where you're starting to lose money, then you're like, hey, I'm actually going to go ham on it, and I'm going to play a lot more, go big or go home, right? It doesn't work like that, guys. You play for the trades, right? You make good trades. That's what you look for. You trade to make good trades, and the money is a bonus. Please always remember that. Okay, you got to stick to your stop losses, no matter what. You got to stick to your stop loss, guys. There is no, I'm just going to wait a little bit longer. Okay, it doesn't work like that because of the mental discipline that's required. You got to have that thick skin to know how to take a loss. Okay, just in case you guys ever get there, right? You will get there. And I kid you not, if someone had to ask me, what has excelled me to a different level in trading, like what brought me to the next level, I would 100% end up telling them it's because I knew how to cut my losses very quickly, right? You got to learn how to prevent a small loss into turning from a catastrophic one. You do not want a catastrophic loss that could have been minimized, and you all have been there. I know 100% that you have all been there where you guys kicked yourself in the butt and you're like, hey, you know what? If I had just kept to my stop loss and I took my loss earlier, I would not be down 5 times the amount that I would be down right now. What do I do now? Do I cut my losses or is it going to bounce? Oh, I've been there too, guys. I made the wrong choice many times, which was to cut my losses, and surely enough, it ends up skyrocketing. But that doesn't matter. It doesn't matter because the ultimate thing to take away from risk management is learning how to minimize your losses because you have to learn how to protect, preserve, and then you can grow your capital. It's only until you learn how to protect and preserve it and minimize your losses, and that's the point where you guys are going to realize that protecting your capital is the most important thing. You got to be very, very protective of it in terms of making sure that you don't turn those small losses into gigantic ones, guys. Okay, so mental discipline, just on a quick note again, right? Got to have that focus. You got to know how to close your eyes, guys. Close your eyes, click on that X button that will close your position. Just get it done with. Take a deep breath. Walk away from the actual computer. Literally, walk away from the computer. Come back in 10, 15 minutes after a loss or half an hour. Go walk around the block. Go chill with your dog or something. Go hang out with the family. Whatever you need to do to alleviate some of the stress, because you got to make sure that you're mentally prepped to look for the next stage of the trading game, right? So, anyways, let's get into MACD, guys. Let's get into MACD and histogram, okay? So I'm not going to even Google the definition, okay? I don't even know the Google definition. The way that I see indicators is how I use them. And that's the most important thing, right? The most important thing is defining it yourself and learning how to use it properly as well. So let's first of all talk about the moving average, okay? So where is this moving average line derived? Well, this moving average line, there's two of them. So the way that I have mine set up first of all. When you guys load up your MACD indicator, okay, I don't want to actually sign out. It's going to take too long to log back in and stuff like that. Actually, I'll go to Edge. Yeah, I'll go to Edge. Because I don't want to reset mine, right? It just takes a while. Let's just go to like a default one or something like that. So this is how we're going to set it up very quickly, okay? I'm going to show you guys how to set it up. First thing that you do is click on this indicator tab right here. Okay, type in MACD, MACD, and it's this one right here, built-ins, MACD, right here. Okay, click on it one time, okay, and then you're gonna get this right here. Double click on it, guys. Trust me, you want to double click on this. You can change it to whatever color you like, right? I keep mine on red and blue. Okay, the red one is the longer moving average. Okay, so This is the MACD right here. The orange one is the one I want long. So this one's going to be red. I keep on red. I just want to be consistent. And this one here, I keep it on blue as well. I keep that just the default color. And the histogram right here, what I do is I click on columns, okay? I like columns better because you can see it level off, right? The default one is histogram, which is the exact same thing, right? But you got to zoom in on it really close, okay? Don't forget that you can double click on it and it opens to a bigger screen, okay? You can double click on it here as well and it opens to a bigger screen as well right here. Okay, don't mind the sound in the background, guys. I've got company. So right here, once again, double click on here, it'll maximize it to a full screen. Double click it here, it'll maximize it to a full screen. And the histogram will just tick up and down, but what I think is better is the column because it's just easier to spot. Wouldn't you guys agree? Keep it on whatever you guys like. Do not keep it on the line. Please don't keep it on the line, okay? You do not want to keep it on the line. Don't go to line with breaks. Don't go to step line. Don't go to any of that. Trust me, you don't want it. You don't want the crosses. You don't want an area. Yeah, that's really ugly. You don't want an area with breaks. You do not want circles. You want columns to make it very visible. Green is a visible color on black, as you guys saw. So this is how mine looks, okay? I just want to show you guys how I set it up very quickly. Make sure your lines, you're adjusting it as well, right? You can adjust it very thin if you like. You can make it very thick if you'd like. You can change the colors as well. And the default one is the one that I have on as well, on the default 12 and 26 right here. So that should give you guys a very good idea of how to set up the MACD and the histogram. So let's leave there. So notice how mine looks. Looks good on black. It looks really good. Always choose a color. That's good for you guys, right? I personally like to trade in the dark, and a white monitor hurts my eyes personally. So what I do is I trade on a black background, right? I trade on a black background for a high contrast, and it's what suits my style the best because, hey, it's just what I like. It's Luna again trying to steal the show. She's always trying to get into these shows, but I don't let her get on. I really don't let her get on too much anymore. I'll introduce her next video for you guys at the beginning, okay? Because I know a lot of you guys love my dog. So the MACD here has got two lines, okay? It's got the 12 and the 26. Two very important ones. The fast one is the blue one, as you can see it curving and moving a lot more, right? And the red one is the 26, which does not curve nearly as much, right? It doesn't have as much movement. The reason why the 12 is moving more is because it's taking a smaller sample. It's taking only 12. Keep that in mind, okay? It is taking 12 of the previous candles. So for example, in this one here, it will take 15 of these candles. It'll take 12 15-minute candles, okay? For that moving average. But for example, actually let's count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so this is the last 12 that it took, okay, to make that particular blue line. So it's just like the moving average I explained earlier. But the 26 one right here will actually take 26, of course. So I'm just going to guesstimate it right here. So it might take this length instead. So it takes the price action, it takes the candles, right? Of course, there's all calculations behind it as well, right? And it forms a line to see when it can possibly cross over, and it gives you a smooth signal in a line. Now, I personally don't use the MACD crossover too much, but what I do use is a MACD crossover where we try to anticipate it, okay? So I hope that gives you guys a very brief lesson on what a MACD is. It's just like how we used it in the moving average crossover strategy before, right? Where we were basically using the 55, we were using the 8, the 13, the 21, the 55, and also the 200. We were using 5. But this MACD in particular uses the 12 and the 26, okay? Now we're going to talk about the histogram, which is probably the most important part of the MACD indicator to me. It's joined in as 1. So what the histogram does is it ticks up and down, as you guys notice, right? It ticks, for example, down here, then it ticks up, then it ticks up, then it ticks up, up, reaches the point there, and it ticks down, it went back up a little bit, and then it came back down and it came back down. So I need to define, first of all, to you guys, what a real-time indicator is and what a lagging indicator is, just in case you forgot the definitions. So what a lagging indicator is for example, it's like MACD, right? The moving average, or any moving average in general. It refers to a lagging indicator because it's taking an average price sample to get the last point right here. So this point right here is lagging because, well, it's lagging because it's taking the previous price action in the previous history, right? And it's compiling basically an average, right? That's why it's called moving average. It's smoothing out the line, right? So it's not really the best indicator in terms of real time. But so to me, the best real time indicators is absolutely RSI. 100%. To me, love RSI. My favorite indicator of all time. Love it. Just I love it so much, guys. I can't stop using it, right? Then I also love histogram. Histogram does so much work for me. And we're going to get into all of this, guys. I just need you guys to know my enthusiasm and my love for these technical analysis tools because they have helped me refine my strategy so much that in the past few years, I'm just very grateful to know these strategies and to have them under my belt. And I want to teach you guys it as well, okay? So the histogram, if you guys notice, right? If you notice, like let's go to down point, right? Right here, okay? We see down, right? We see in the negative side. You have to see histogram as two main things. One is the positive side, right? Above this axis. And the other one is is below this axis right here, right? So this is the x-axis, right? That goes left and the right, right? And this is the up and the down axis. This is the y right here, okay? So this is positive, this is negative, right? That's how we look at it on the Cartesian scale for all those math geeks like that, right? It's just very simple, like that. So anything on this side is positive, right? Up here, or this whole quadrant actually should be positive. Anyways, we're not going to get into that, guys, but that's what I basically mean, right? Anything above this side right here is positive, and anything above this side is negative. So this is a positive side, and this right here is a negative side. So make sure you guys remember that, okay? When we are trending on the positive side, okay, that is a good thing. That's a really good thing. But when we are about to cross over to the negative side, that is where the MACD happens, okay? So this is why it's a lagging indicator, right? It already started down ticking, if you guys have noticed, right? It started down ticking already. And then finally, when it got to this point, that's where the crossover actually happened. So a lot of people like to sell or buy on crossovers, but sometimes you have to anticipate it ahead of time. And when you anticipate ahead of time with other indicators, it gives you much higher probability of being successful. Okay. So let's look at the moving average strategy as well. Okay, from say this point right here. All right. So let's just say, am I on the daily here? Yes, I am on the daily. Okay. So let's just say from the beginning, all right? You guys, you got two strategies under your belt now. So, hold on, how am I going to word this best for you guys? Okay, so the best way to look at MACD is like this. You buy it when it crosses over. Let's just highlight, okay? You basically buy it on a crossover from the negative side. From the negative side, remember this rule. You buy on crossover on the negative side, okay? To enter a long position. 2, you close on a crossover on the positive side to enter long, okay? Or sorry, to close on the positive side, close. Yeah, that makes sense. So you buy it on a crossover on the negative side to enter a long, and you close your position on a crossover on the negative side. That has to make a lot of sense, okay? And I'm going to go over it with you guys in so much detail, and we're going to go through so many different examples as well on how this strategy can be so profitable, and you guys don't even know it yet, okay? So just as an example, let's just play with this around for fun. You buy it right here, okay? You buy it, let's just say that you're buying it right here and using this strategy only. Oops. Where did it go here, guys? Right there, okay? All right. I gotta get this lower. All right, there we go. So let's just say you on the green box, we'll say green is for buy, okay, and the red will be for sell, okay. So let's just say you bought right here when it's on the negative side. Okay, we're just gonna start at a random place. I don't know why my screen's like moving and going crazy like that. My apologies, guys, for moving so much there. Okay, so you buy it right here, okay, and then we'll sell it right here. We'll say, okay, we'll sell it because it actually crossed over. Okay, we're just gonna use this as an example. Now let's just see. I'm gonna delete this now. So we bought it right there, okay, and we sold it pretty much right there. Let's make this MACD one a little bit bigger. We don't care much about RSI right now, okay? So you guys see me buy it right here, right? Right at this crossover there, you see me sell it at that crossover right there. Let's see what it would have yielded us, just as an example, right? You would have bought it right there, okay? You don't know where your stop loss is really going to be at because you're just riding it. Or sorry, you don't know where your target's going to be, but you know your stop loss should choose a really reasonable stop loss, right? You're don't know where your target is going to be, but you never know how high it's going to get. So that's basically where we opened our position, right, on this crossover right there. And that's where we closed our position on that crossover right there. Let's see what it would have yielded us, right? It would have yielded us, we would have closed our position actually right here, okay? And we would have set our stop loss slightly below the previous one right there. So this one right here, in hindsight, it would have yielded us a risk to reward ratio of literally 4-to-1, guys, okay? And yes, you could have sold it higher to make a 12% gain, but what if it actually never officially crossed over, okay? What if it actually never officially crossed over and you wanted to wait, right? And it never crossed over. You got no reason to actually close your position. But this strategy works incredibly well, okay? Right? So now let's say you actually incorporated breakout strategy using the moving average strategy, right? So you're incorporating breakout strategy, you're incorporating perhaps some moving average strategy as well. Let's see if we can actually maximize our profit. So let's just see for fun, guys. I'm going to show you guys how we find confluency. Is that a word, confluency? I don't think it is. So we use confluency. I just made up that word, okay? I'm making up that word right now. I'm sorry, guys. To find more than one reason why the stars are actually aligning, right? So we try to find reasons why stars are aligning. Hey, maybe the MACD is crossing over. Hey, maybe the moving average is crossing over. Hey, the RSI is getting strength, right? And once you guys find enough of these reasons, you find it confluent enough to enter a trade, and that is how you obtain high probability setups. Okay, so now let's just see. Oh no, this actually crossed over the negative side, right, or the positive side, but this one actually never went back to the negative side, right? You guys remember my two rules: one is buy on the negative side, and two, you sell on the positive side, right? Yeah, you would have closed your position there because it definitely crossed over. But what about here? This officially crossed over, didn't it? Right? Yeah, this officially crossed over. Think of trading like a puzzle, okay, guys? Like a puzzle that has literally no answers, no right or wrong answer whatsoever. But the puzzles have a better way to look at it than other ways, right? So here you would have bought it, okay, right? And here you probably would have sold it, right? Because, hey, if you're going to sell it on the negative side, just assuming that we're not even buying it on the we're not buying it on the negative side and we're just selling it anywhere. Just skip those rules for now, okay? Well, you would have sold it right there, right? So now let's see what kind of profit you would have made on that position right there. You would have bought about right here, okay? That's where it crossed over. If you guys notice right there, you'd have set your stop loss for probably slightly below these particular regions, right? And then you would have closed your position right here, okay? Right? You would have closed your position literally right there. That would have been brutal. You wouldn't have wanted this trade. That's horrible, right? 0.28 risk to reward ratio. Now, let's see. Sorry about my dog there. Let's see if we can actually find a better reason to not close this trade now. We say to ourselves, hey, this actually started to fan out, right? It started to fan out. The MACD crossover is actually happening right now. Or sorry, the moving average crossovers are happening. It's not the golden crossover, but the 55 moving average strategy that we talked about last episode actually started to fan out this whole thing right here, right, guys? And now we say to ourselves, well, it's fanning out, even though this is crossing over. Do I have a reason to close my trade? No, you guys actually don't, right? You got absolutely no reason to close your trade. So now we're just going to keep riding this, okay? We're going to keep riding it, right? And we're going to say to ourselves, well, it's crossing over right there. Maybe I can take my profit if I want to, right? Crossing over there. Well, do you really want to take your profit if it's still riding it along the 55 EMA? And the answer is no. You do not want to close your position, right? So take a look at this, guys. We see, right, in this particular region where we entered, not only did it break out in terms of, breaking above these highs right here, okay? You guys take a look at here, right? Let's say we incorporated even more strategy, guys, right? Right here. If you guys take a look right here, I'm going to show you guys 3 confluent reasons why you should have entered this trade. First of all, we're going to annotate it all well for you guys as well because I need you guys to understand this. We need to incorporate it now. Notice how we're jumping from very beginner level to extremely intermediate level, right? So now we see these points right here. Agreed? Agreed? Right? This is now a sloped support, or sorry, resistance, and as sloped resistances, it's going to break out. So what you want to do is you see right here, remember the candlestick analysis strategies of ours? We see rejecting hard to the downside, okay? We see reject by more than how much is $30 to the downside right there? And because we saw reject to the downside, psychologically, what it refers to is the bulls have won. The bears attempted to push down the market to take profit, but the bulls successfully defended this particular price range, hence a long wick. So guys, the 3 reasons to have entered this particular trade right here is, first of all, it broke the slope resistance, right? Broke the sloped resistance, okay? And the second reason, can you guys give me another reason? Just think about it. I've given you another reason already. I just want to see if you guys are actually following along as well. I'll give you like 30 seconds to see what the second reason would be to enter this particular trade. Okay, if you guys have actually said 55 moving average strategy, fan out, EMA strategy, fanning out. Bingo. And the third reason, which I'm not sure if I mentioned it quite yet, is right here, the crossover, okay? So buying it on the negative side, guys, that's a great time to buy when it's in a massive downtrend, okay? Massive downtrend, you definitely want to buy on a crossover like that because it's now confirming that it's going from the negative side of the histogram to the positive side of the histogram. So notice right here what the histogram is, okay? So every time, I don't think I even explained what the histogram was, my apologies. So what the histogram does is if the price fluctuates, the price action goes upwards, right? It's going to tick upwards positively. It's going to go from the negative side and eventually positive, 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 and eventually reaches the positive side, right? And it's a really good gauge of strength. Real-time indicators like the RSI, like the histogram, like learning how to read level 2 and seeing momentum changes for market depth. Those are the things you want to focus on to get real-time analysis without taking any type of average whatsoever, okay? Sorry for Luna. She's probably seeing a squirrel outside. She goes kind of crazy whenever there are squirrels. So I personally use, once again, reading level 2, action book, which was I think very early in the lesson videos, and then I use also histogram and RSI. These do not take any type of average compilation or sample of previous price history. It doesn't do that at all, and it gives you real-time gauge, and that's why they're crucial to not have and rely on these lagging indicators, right? So you guys would have bought basically right here, actually, okay? You would have honestly bought right here, okay? On this particular crossover first. But let's just say you bought it here and you sold it there because you weren't sure, right? It definitely didn't break this particular resistance, so you would have made a little profit there. You would have made about 6.8% profit there. Okay, that's a pretty good trade in my personal opinion. pretty good. But now we're trying to find reasons to not close this position. And we would have bought it there again on the breakout, right? Right there. And the third reason was because the MACD crossover, okay? The MACD crossover was right here. That's the reason I entered this trade. One, it broke the sloped resistance. Two, the 55 EMA strategy started fanning out. And three, the MACD crossover. So now, how do you know? How do you know when to sell? How do you maximize your profit? Now, don't get me wrong, guys. Just because I focus on my 1 to 3% gains per trade, it doesn't mean that I don't know how to ride it, right? My strategy is. Do you guys hear Luna? She's howling right now. My folks came to visit me and they probably just left. I heard them saying something to me like bye, but I was recording this video. I think when I said don't mind the sound in the background, I have company. And when my folks leave, Luna goes on a massive tangent, right? She gets pretty depressed when they're not around sometimes. So yeah, my parents are attached to her too, of course, right? She's kind of part of the family. So anyways, 3 good reasons to enter the trade. Why do we not close the position? So my strategy, 1 to 3% gains, has nothing to do with me not knowing how to ride it, right? It's because I like to take advantage of heavy volatility. If a coin only moves 10% a day, I might actually still be able to capitalize over 25%, right? So it just depends on how many of these bounces I play. So anyways, so now what you're going to adopt, guys, and listen firmly when I say this, okay, is you're going to adopt after it has broken out, right? You bought it on the MACD crossover on the downside, which is super important, right? We see, you guys take a look at this, right? How many days did it take to actually cross over? It took 60, no, not even, it took 61 days, okay, for it to actually eventually cross over again. Some people literally just wait for this crossover to happen. And once they wait for this crossover to happen right there, right, they buy it, right? And then they'll look for moving averages, right? What I personally used to do a lot was I said to myself, well, this is a crossover right there, right? Should I actually sell it right here? Right here. Okay, should I actually sell it right there? And the answer is yes, I would have sold it. Okay, I would have sold it right here simply because 2 reasons. One, it crossed over there, right? It's a pretty hard crossover. And 2, it couldn't really maintain staying above even the 55 EMA. So I don't want to take my risk to break even or even get stopped out, right? So what I do is I take my profit and I wait for the next opportunity. So now this opportunity is now entirely done. Okay, we're looking at the daily chart, by the way. So 3 reasons again. 1, the 55 EMA moving strategy crossed over or started fanning. 2, the MACD crossed over here. And 3, the third reason is that it's breaking out of this sloped resistance. So now that you have entered a position, you will now close it. Okay, you're using the MACD as an assistance, not as the main tool to trade. People love MACD because of its simplicity. Everybody can understand it. It's really easy to read. It's very easy to visualize and get a good gauge of what the market is doing. Now, the histogram is going to be used in some specific times as well, right? Right now, we don't care about the histogram, okay? Because we've already entered a position from right here, which I'm just going to make a big box there so I remember it. So now we're now going to adopt the 55 moving average strategy, okay? And now that we see it as well, like it's trending well above the 200, right? So personally, I would probably end up taking my profit when the 55 moving average strategy ends up crossing over it again, right? So once again, we use the MACD as an assistance to enter the trade, right? Right here, because it's actually crossing over on the 55 moving average and still trending well above there. And we look on the MACD again as well, just so you guys know, it did cross over there, okay? So, but we're now going to pretty much ignore the MACD, okay? We're going to ignore the MACD and we're going to say to ourselves, I will not dare close my position until I actually end up crossing over where the 55 actually ends up resisting all of them, okay? Now here, very, very tempting, okay, to close my position right there. See this candle right here? a lot of people would anticipate that it's going to go down. But because this actually started to form a hammer candle with decent volume, it shows a rejection to the downside from 937 to about 888 actually. A $50 rejection was huge for Bitcoin at that time, right? 5% rejection. So because it actually did that right at the 200 moving average, you do not close your position. Got to make sure you're incorporating a lot of different technical analysis as well, okay? And now what we're also seeing is this. Check this out, guys, okay? We're seeing the histogram start to positively tick as well, right? Now that we see from here to here, it's actually gaining strength. And keep in mind that this is a real-time indicator. And we also look at RSI, which I know you guys don't know a lot about it yet because we never got into that video, or I'm going to assume that you don't. But what we use for RSI is if it's bullishly diverging in terms of if we're getting higher lows, right? Then what we're going to assume is that, hey, the market is actually starting to gain strength, okay? So right here, I would not close my position because of this hammer candle bouncing above the 200 EMA. And we say to ourselves, the 200 EMA has been actually very successful in staying above it since 2015, right? So we would have entered it there. Here, very tempted to close my position, but didn't quite. Successful. If it actually did cross over to the downside, right? It never crossed over yet. If it actually did cross over, it would have kept going down. But if it did cross over, you guys might be saying to yourselves, oh, shucks, I should have actually took my profit up there. No, guys, you don't say that because you could have taken your profit here. You could have taken it there. You could have taken it there. You could have taken it, somewhere there. What this strategy allows you to do by entering, when you time entering with a MACD as well, okay, gives you really high probabilities. And here you would have made yourself a 78% gain. I will put it into perspective for you right now again. If you use this strategy right here, you would have made a 78% gain, okay? Over the course of, how long was this? This was over the course of only 6 months, guys. That's a lot of money. Put in $100,000, you would have made 78K. Put in $10,000, you would have made 7.8K. I mean, anybody who's got some money lying around, crypto is definitely a very safe investment. It's really risky investment in my opinion, but I think that investing in Bitcoin is not risky for the long term at all. Now, don't get me wrong, trading is still gambling, right? It's definitely still gambling. You're taking lots of risk, right? So you want to be as informed as you can in the market. I know a lot of people say that cryptocurrency is very volatile. You could lose all your money like that. But the truth is, guys, Bitcoin is here to stay. We all know it's here to stay. It is not going anywhere for an extremely long time. It's got the potential to usurp traditional monetary systems out there right now. And I do believe that it's a fairly safe investment for the very long term if you're holding it. I'm very excited, guys, in 5, 6, 7 years from now to be looking at the Bitcoin that I still hold from, like 6,500, 70K ranges, right? I'm going to look back, guys, when it's 250K. And honestly, we're just going to laugh together at it if you guys are holding. We're going to laugh together, just chuckle and be like, if we're still holding Bitcoin from 8K to 250K. Think about that for a second. Put that into perspective. One Bitcoin will have yielded you $242,000. It's a lot of Bitcoin, guys. So here, you would have still made 78% profit, right? If you chickened out for, you didn't stick to that strategy, or if it actually did cross over. Now, let's say it didn't cross over, which it didn't, right? Here, you would have been very tempted to as well. You would have been very tempted to because it actually rejected it to the upside. But we still see the yellow line below all of these candles, and we see the 200 below all of these candles as well, which is also supporting the 55 moving average, right? So if you're seeing the 55 moving average not crossing over yet, don't you guys dare for a moment close your position because you're going to regret it, okay? So you guys got to make sure you have that mental discipline to make sure you stick to your strategy if you are going to be successful. If you deviate from your strategy, guys, you cannot do that. You got to make sure that you've got this writing board up, right? You got this whiteboard. You've got this plan already. You've got your strategy outlined as well. You stick to your strategy. You do not deviate from it. And then if you happen to lose, then you go back to the drawing board And then you start to revise your strategy until it gets better and better and better and better and better. And guys, I'm an engineer, right? I know how things break, but most importantly, I know how to fix them. So that's kind of one of the main bonuses of have studied math for 3 years, have studied engineering, right, as well. So it gives me a logical way to think about things when they fail and how to fix them. So I'm really glad that I have these skills, but I'm not saying that they're necessary skills. I'm just saying they're skills that help me. And I want you guys to also realize that when we have a lot of these modes of failures, when you guys have your strategy that fails, it's okay. Let it fail, right? Gracefully let it fail and humbly as well, and accept your loss. Go back to the whiteboard, revise your plan to see why it failed. Now, if you guys decided to take your profit here when it did not cross over, that you actually just deviated from your strategy, right? And then because you deviated from your strategy, you would have said to yourself, well, they never crossed over. I should have held because it went from 2,300 to whatever it's going to go to now. So now you're still following the 55 moving average strategy, okay? It guarantees that you are basically going to ride it for a long time, okay? We're just going to keep going, right? Sorry for right clicking there so much. So the MACD is going to get to a very high point soon, okay? We got to look at it from the perspective of a really high point, okay? Now, when it gets to around here already, I'm still not tempted to sell it because it's bouncing, came here, bounced off of the 55 VMA, right? It just keeps going and going and going, right? But now if we actually look, for example, here you guys don't know exactly when to sell it yet, right? So on the MACD, if we actually had only these points right here, right? You'd be tempted to sell it here. You'd be tempted to sell it there, right? You'd be tempted to sell it there probably, okay? Actually, realistically, you probably would have sold it. Let's backtrack for a moment, okay? Let's say that you actually ended up taking your profit right here at the crossover, okay? It's a pretty high crossover, right? You take your profit there. Okay, awesome. 2,900. Now you will basically buy back as soon as you confirm a bounce to the upside, right? Perfect. Came down here, broke out again, right? And let's say you incorporated that breaking the moving average strategy again. So there's many ways to approach it, right? You guys can just ride it. Let's just say you bought it at that range right there and you just rode it to the 55 moving average strategy, right? Then you would have sold it right there basically, okay? You would have sold it right there at 13K pretty much. But now let's say you actually incorporate MACD as well and often, okay? So you would have sold your position as soon as it crossed over, basically. And then you would buy back into it right away as soon as you confirm a bounce. So the crossover happened right here, right? I'm just going to draw a horizontal line actually. So the crossover happened right there. Yeah, that looks good. So then you would have sold it right there, which was kind of crappy because keep in mind that you have to anticipate the crossover, right? Because this crossover happened right here. You're not selling it at a really low point. Why do you want to sell at the very lowest point, right? You want to sell it by incorporating histogram now. This is my favorite. So as soon as I started to see some negative ticking here, I'm done, guys. I'm done. So this tick right here, it actually allows us to anticipate the crossover. So this is the candle that you'd actually want to be closing it on. So now we're talking about the difference between this candle, okay, like that one, and also this one right here, okay? You guys look at the price difference now. So when you're incorporating histogram, check it out. The down ticking, right? That's really important to remember, guys. The down ticking starts to signify that the down tick, it's still on the positive side, but it's actually slowly making its way down to the negative side, right? And because that's happening, we can easily guesstimate that, hey, it's more probable that the market is going to go down. So guys, as soon as this candle was pretty much working its way down, you would have taken profit. And that's a pretty big difference, in my opinion, of about 13% profit, right? Not bad at all. So now, guys, but you would have regretted it. You would have regretted selling it, right? Because it never officially crossed over on the 55 EMA, right? So now what you got to do is you got to say, oh, wow, this could cross over to the negative side. But it didn't. It actually fanned out instead. So you're going to enter right here as well. And you're going to say, oh, my goodness, it actually crossed over from the negative side as well, guys, okay? Look at the histogram as well. Let's say you were just anticipating, buying it on the crossover, right? Right here. I can't even get there properly. So the crossover pretty much right there. Okay. You're buying it basically on this candle right there, or even earlier, right there, anticipating it to cross over, right? Pretty much right here, anticipating it. You would have bought it right there. Now, let's say you incorporated histogram analysis as well. Notice how it's ticking upwards like this and it's making its way to the positive side, like think of stairs, right? Notice how this tick right here, right? If it kept going down and down and down, it would mean that it's still gradually dropping in price. But this upwards tick means that there's momentum being gained, right? So if you notice right here that the histogram is gaining positive bullish momentum, we also see here that it would have gained very positive bullish momentum as well. So what we say here is if this is actually doing that right there, right, we can anticipate a crossover, right? We can anticipate a crossover and we can buy near the bottom, right? But you guys have to also remember that, hey, this one looks like it's about to cross over as well, right? Do you guys see right here? It looks like it's about to cross over. So is it also safe to say that you can start assuming it'll cross over and you could buy there? No, you cannot for this one because it's still right now, guys. It's still right now on the see right here. When I'm talking about the negative side, I'm not talking about just the histogram. Okay, I'm also talking about the MACD. This MACD right now is on the positive side, right? It's on the upper half of the y-axis. You guys see that as well, right? But if you actually take a look here, this is on the negative side of it. It's on the bottom half, right? So you got to make sure that you remember these small little sub rules as well. That's going to help you over time. So let's just look at a lot more examples, guys, right? So here, once again, the MACD, the actual moving average, is on the negative side. And that's why you enter a trade, right? So two confluent reasons. One, the 55 moving average strategy is definitely starting to fan out. And two, a crossover is happening already as well, right? So now let's just say you actually wanted to not just sell it at the 13K that I was mentioning. You want to play even more bounces for swinging, okay? So now you would sell it when you're crossing over, right? I wouldn't have sold it there, honestly, because it's still even, right? And the 55 moving average is still fanning out pretty nicely, right? So let's just say you entered a position right here. You don't really know what your risk to reward is yet. You don't have a defined targets because this is an unknown territory, keep in mind, right? It's an unknown territory, but what you do got to know is that you got to know where to keep your stop loss still, right? So this is a really big risk right here still. So I would have kept my stop loss super tight at maybe even 2-3% right there, right? So let's just say we went to about 3% or something like that. So then you would sell your position right up here, right? You'd sell it right here at the crossover. And you would have yielded yourself if you bought it from, let's see what this is actually going to get into. Let me get my drawn tools up here. You would have actually profited yourself from right there on the breakout when you buy it, and you close it right there on the MACD crossover. You have made yourself 76%, guys. 76% over 33 days. Like, that's a lot of money, guys, just by using this strategy. So once again, I'm going to teach you guys it again, okay? It's starting to fan out with the 55 moving average strategy, right? And also, right here, I actually took this trade, guys. Like, I didn't have Twitter or YouTube back then, but I took this trade, guys, in July, and it was an awesome trade, right? I didn't have a big position then because I wasn't really trading too much full time. I was more so just swinging. Taking more so swing positions, and I didn't really start day trading heavily until maybe August or so when I started my YouTube and Twitter there. But you guys would have made a 33% gain. That's a big one, right? And then it crossed over definitely, right? But you don't want to buy on the crossover, guys, on a very positive side. Trust me, you do not want to buy on a positive side when it's crossing over, right? Here, if you actually didn't sell it already, you probably would have sold it right up here, okay? You definitely would have sold it right up there. Notice how the histogram is still on the negative side, right? But still kind of wavering on kind of even. And even though it's still going up, sometimes it does that. We're staying very close to neutral, but it's still going up slightly, right? Now, let's say you want to enter a short position, all right, guys? Let's say you want to enter a short position, and you're just letting it ride, right? You're seeing how it goes, and you see this other crossover from a really high side. You say to yourself, well, the price action is still going up, right? Still getting a little bit of strength. But here, could I actually enter a short position? Well, let's take a look, guys. Could you enter a short position from right there, just from a MACD crossover? Let's just say you entered a short position right there, okay? And then you actually close your position right here, okay? Right there. That's where the crossover is, right, guys? So how much would you have made? You would have made yourself, if you entered it right there at that crossover, you would have made yourself 22%. Wow. Are you guys seeing how easy this strategy is? Guess what, guys? Are we in the negative side of the MACD? Yes, we are, right? And where's the next place that you would sell it just based on the MACD? Right there, okay? Just right there, guys. Simple, okay? Now, if you bought right here, if you bought right there, and you sold it, right the crossover, right, which would have been right here, I guess, you would have made yourself 57%. 57%. Kind of crazy, right? Now, we're going to go look for a crossover. Definitely crossed over, right? You don't want to buy it, like I mentioned. You don't want to buy it on a crossover on the positive side. You want to look for another few reasons to enter it. You cannot use MACD alone to enter a trade, okay? You have to make sure that you're looking for some sign of support or rejection to the downside or some sort of gaining some strength as well, okay? I'll introduce RSI very quickly, but what we see is that this is gaining strength right here, okay? It's gaining strength right there, right? And what we do see is that it finally just dropped down. So even though it went up a little bit there, I don't think it was a good enough trade to enter, guys, okay? Like you might have missed out, honestly. You might have missed out right here if you followed this specific strategy. You would have said to yourself, shucks, I should have sold it. I shouldn't have sold it because if I didn't sell it, my 50% profit could have turned into 200% profit, right? So then how do you decide whether you should take your profit now, right? Or just ride it longer, okay? This is where the trick comes in, and it's honestly up to you guys to decide, right? Sometimes there can be very neutral types of signals in the market which do not actually tell us if it's going up or down, and it can be very confusing in terms of it's giving us signs it's going up, it's giving us signs that's going to go down, right? So if you don't want to overtrade, guys, you can mix up your MACD crossover strategy, right? Mix up your MACD crossover strategy with the strategy of moving averages and the 55 golden crossovers, right? So yeah, you would have missed out on some there, but let's just say that you did miss out on the profit from here to there because you're following the strategy. Now, all strategies are not perfect, okay? There's no such thing as a perfect strategy. It only comes down to a strategy that suits your personality or your lifestyle a lot better than other ones. With every strategy comes its flaw. There is no such thing as a perfect strategy because if there was, every single person would be using it. That's why I'm encouraging you guys highly to develop your arsenal of skills so you've got many tricks up your sleeves. And once you do, guys, you guys are going to know very well how to trade. I think if you put in a lot of hard work and time, you will definitely succeed, and it'll come to fruition how these good trades that you're making will eventually have a big bonus of money at the end of the day, right? So you missed out this 100% profit. You only took 65 instead, okay? Now, what do you do next, okay? You look for a sign of rejection to the downside, okay? Now, there are some exceptions, like we talked about earlier, why we would buy on a positive crossover, right? We would buy on a positive crossover if we're finding rejections to the downside. I was trying to look for the previous one, but I couldn't find it. So this right here, guys, is a rejection to the downside at the 55 EMA, okay, right there. And then as soon as it broke above this particular price point right there, boom, I would have entered a trade because of many reasons. Check this out right here, guys. Do you see this MACD crossover on the positive side, right? You see it there. And do you also see that it almost coincides with where this breakout is around here? But the breakout is more so around right there, right? Of the high. Now notice how the breakout of this previous high was there, right? And notice how we're getting a crossover right there from the negative side to the positive side. Boom. That is where you enter your trade at 8K, okay? That is where you enter your trade for 8K right there. It definitely was trending above it. When it broke above the resistance, it actually acted as support, right? So then you would ride it. Then you would ride it because you see the crossover right there, and you would sell it at the next crossover point, guys. Right there. Okay. Around there. Anticipate the crossover. Okay. And boom. Congratulations, guys. You have literally rode Bitcoin from about, whatever that was there, less than $1,000, and you have successfully taken your profit around the $19,000 mark. Okay, that's how easy it was to play Bitcoin, guys, from $700 to $20,000. Actually, that's how easy it is to play every coin. Yeah, I'm not saying, I apologize if that sounds really arrogantly or cocky, but I kid you guys not, that you guys focus on developing your skills, okay? And eventually you're just going to be staring at it all day, okay? You're going to be playing it like it was a puzzle, like a crossword. We're just searching for things, for tiny little clues, right? You're hunting. You're a hunter of volatility, a hunter of trying to find confluent reasons, a hunter of trying to find more than one reason to enter a trade. Think about this for a moment, okay? Think about this for a moment, this trade again. I'm going to talk to you guys about incorporating 55 moving average strategies with MACD very precisely in this moment, okay? And also rejections of candlestick analysis. So once again, we're taking we're taking technical analysis of these strategies that I'm implementing to a very different level, very intermediate, if you guys remember from the first 10, 11 lessons, right? Not nearly as advanced as this stuff. So think about this for a few moments, even watch it twice if you'd like. This is how, guys, I rode Bitcoin, honestly, I didn't trade like late December-ish. I actually stopped trading around this point right here because my grandma passed away. So of course I took time off, guys. You know how it is, right? So I actually ended up playing Bitcoin from about 8K all the way up to about 16, 17K. Yeah, it's a lot of money, guys. And this is what I use specifically, okay? I use this strategy right here where I saw it reject to the downside despite a red candle. I did not buy it on this candle here, breaking above it. I was tempted to buy above this breakout, right? But that one made a lot more sense. I also wanted to wait for a crossover on the MACD, okay? So then I saw this right here, the crossover there, right? And I'm not talking about RSI at all yet because we haven't implemented it into our strategy, right? We see the MACD crossover, we see the rejection to the downside, and we see it break the high, right? We see it not only break the high, the all-time high, but it also rejected to the downside where the previous resistance was acting as support. So once again, MACD crossover, guys, rejection at the 55 EMA, and also breaking above the all-time high resistance. So does it make any sense to not enter a trade? No, it makes no sense to not enter a trade. It makes every perfect reason to enter a trade, okay? Now you say to yourselves, well, if I want to maximize my profit, okay? I really do want to maximize my profit. I don't want to wait for the 55 moving average strategy because I want to focus on taking more heavy and volatile setups, right? I'm going to play more bounces as well. Okay, well, you just literally rode it, guys. You literally rode it from 8K to about right here is where you'd have closed your position on the MACD crossover for a 138% gain. Okay, now guess what, guys? We're at a really high point for Bitcoin, $20,000. Okay, $20,000. Is that a psychological number? Is $10,000 a psychological number? Is 20? Will 30? Will 25 be? 25 is going to be a big psychological number because it's a quarter, right? It's always a psychological number, in my opinion. 30, probably. 35, probably not. 40 is going to be a good round number. I don't know why 35 won't be a really round type of number for it to act as a hard resistance, but we'll see. I do think that Bitcoin's going to get to 35K this year, though. To be quite honest, might even shoot past it. Like, who knows, guys? I say it's going to hit 35K and then it's going to correct, but then it's just going to shoot past it eventually. I'm so confident and bullish on Bitcoin, guys. So, guys, a psychological number has been reached. Does it make sense to enter a short position? What do you guys think, huh? Does it make sense to enter a short position? So a short position is the opposite of long, where you want to enter from the MACD crossover at a positive point, and you want to close your position at a negative point. This is going to blow your mind. You guys ready? You guys ready for this, okay? It's going to blow your mind. Watch. You enter a short position right here, okay? And then you close your position on a, well, first of all, okay, first of all, you have to remember to close it on a negative side. So do not dare close it right there, okay? Do not dare close it right there. Close it on the negative side from really high R side like that, right? That's what you want to do, especially when we've reached a very psychological point already of 20K. You can easily expect a correction, okay? Now, what you guys could have done is you could have, let's backtrack a little bit. You could have closed your position here as an example, okay, right there. Clearly, you could have closed it there, right? But you wouldn't have yielded that much profit. You would have entered from right here and you would have closed it right there because you're following the strategy to maximize the potential of your profits, right? So you would have closed, and you would have closed your position right here. You would actually have only made 10%, right? Because you're closing on the negative, on the positive side. Not a good thing, right? So that's why I like to wait for the negative side, unless it actually ends up stopping me out. I would have my stop loss around the 20K range, right? I would have entered at 19K. I would have, pretty big potential loss there in terms of percentage, right? But let's just say you follow that strategy of you entered because the MACD crossed over right there, okay? And now it's going to cross over down here again, right? Right there on the positive side, right? You would have made 10% profit. But let's say you held strong a little bit and just waited, okay? Really weak tick on the histogram. And after a day, it actually ended up crossing over again. So you just secured yourself from basically closing a position, right? Not only that, you see it most likely going to go down after seeing a candle like that with this type of volume, which is kind of a bearish spinning top, right? Even though it's green, it's like a hammer, but on the upside, which can confirm or show that Bitcoin is losing a lot of steam, right? Doesn't guarantee that it's going to come down, but there's a high probability of it coming down because Bitcoin's losing steam. So then you would have just held strong, guys, and you would have said to yourself, yes! I found more reasons of a downtick, okay? You're going to say to yourself, 55 moving average strategy is starting to fan out pretty hard, guys. Pretty darn hard, right? This looks like it's going to cross over, right? It did. But guys, because the 55 moving average strategy is still actually downticking and fanning hard from the psychological high, where do you guys think the next logical point to take your close would be, okay? To take your profit right here, guys. Right? And you could have said to yourself as well, but the 55 moving average never actually closed yet. So there's so many circumstances, right? So many circumstances. You guys could have closed your position here, to be quite honest, okay? Let's just say you closed it right here. Well, you would have made yourself a pretty decent position as well. You would have entered there, and you would have closed it right there, okay? You would have made yourself 37% gain, right? But let's just say that you have confirmed the bearish spinning top, right? And it's breaking below these resistances right here, okay? So say we played a breakout strategy as well now, you would have entered a short position there, right? Because it actually didn't really cross over heavily, right? And then it didn't cross over to about right there. So you would have entered a short position. Stop loss definitely set somewhere slightly up to higher than here, right? Maybe 13.2 or something. You would have entered right here, and you would have closed your position right around here, actually. Right? That would have been another 32% gain right there. So all that I see, guys, are setups, to be honest. Like, I just see setups everywhere. And you develop your eye, right? Think of it as training your eye. Literally, that's what it is. Training your eye and training your mind and looking for clues and trying to see how you can logically and systematically flow these things together, right? How do these things work? How do they work combined with each other? How do they work in conjunction? Why do I need to use a lot of different indicators to match it up and find confluent reasons with others? Well, you guys are starting to see how the stars can align, right? And now, guys, right here, right? Oh, it crossed over to the positive side, right? Crossed over to the positive side. But, guys, check this out right here, okay? Got to the negatives or the positive side, but we got a negative crossover, right? Looks like it's about to come down. So shorting is wise, guys. Shorting is very wise from these points. But let's backtrack a little bit as well. And let's talk about buying it on the crossover here, okay? You bought it on a crossover there, okay? And you would be selling it right there. So you'd be buying it right here, and you'd be selling it literally right there for a 35% gain. Pretty cool, right? How much possibilities we're actually seeing in the short term. So let's just say that you actually had your risk to reward set up here as well, right? You would have set your stop loss for slightly lower than here, okay? Slightly lower than here. And the thing about these particular setups is you don't really know, guys, what your risk to reward is going to be, right? But honestly, if you guys know about your fib levels yet, yeah, fib levels, I would have just targeted a dead cat bounce level. That's the truth, right? And I would have targeted 382 there. I would have nailed it. And that's going to be even more fun when we get into Fibonacci extensions and retracements as well. You guys are going to have a lot of tools under your belt. Notice here how I added one tool called the Fibonacci retracement level. And notice here, I targeted the 382 there, which I always do because, yeah, I'm not greedy, guys. I like to minimize my exposure in the market. And if I minimize my exposure, it just calms my mind a lot more. I always talk about the psychological part of trading as well, because the psychological part of trading is where a lot of people forget about it. And they end up failing as a trader because they don't train their mind as well. So we introduced Fibonacci here, just briefly, target nailed, right? And now, guys, it crossed over there, right? And notice how it never actually ended up fanning over to the 55 moving average strategy. So we actually got a false breakout, right? These are what we would call bull traps, where it tried to go up at once, got a massive shooting star, tried to go up it again, got this doji, followed by a shooting star there, or a gravelstone doji, whatever you want to call it, and it just ended up rejecting, right? So then you'd want to short the market because it ended up fanning to the downside still, right? And then where would you target your close? You'd probably target your close right around here if you're using the MACD strategy, right? Right here. This is the MACD strategy. You guys would have targeted right there. You would have entered your position right here for a short, and you would have closed it right I guess where is the candle is going to be for here. That would have been a 17% gain, right? Not bad at all. So now, let's just say we're looking at going long here, right? Well, here you guys see the MACD crossover right there from the negative side, okay? And then you would enter a long position pretty much right at the bottom. That nailed it, guys. Even if you were like a day late, it's okay. Like even if you're a day late, it's crossed over already. There's still lots of opportunity, right? So that's a great thing. So yes, the MACD did cross over, but we got a death cross, right? We keep in mind that the death cross is a lagging indicator, and it will not actually successfully show all of the most recent events and the most recent information up to date because it's a lagging indicator. So but if you guys notice on the histogram, right, the histogram actually ended up upticking as well. So yeah, not only that, if you introduce RSI, you see it bullishly diverging right here, right? It's gaining a lot of strength in the market, lots of volume is being put in. So let's say you looked at a lot of tools, like right here, gaining strength, gaining strength, gaining strength. Histogram is actually ticking. So now what we're going to do is we're going to anticipate the crossover right here. You could have bought it early or you could wait for the crossover, up to you guys, and it all depends on your tolerance for pain, right? You would have bought it right there. And where would you have sold it, guys? You would have sold it right here at the crossover. Check it out on the top side because it did reach the positive side. So then you would have bought it literally at the bottom for this trade, and you would have been in about a 28-day trade so far, okay? You would have been in a trade for 28 days and you would have made yourself 42%. That's a pretty big trade, guys, okay? Keep in mind that 42%, if you put in $1,000, you just made $420. If you put in 10K, you just made 4.2K. If you had 100K, you would have made $42,000 just by literally following that strategy. It's not really hard, is it? It's really easy. Can we actually do this on other coins, guys? Okay? Can we do this on other coins as well? Absolutely, you can. So let's go on the daily. And you know what? First of all, I want to talk about Bitcoin before I move on and do it on a lower time frame. Okay? Now, these are more so geared towards swing positions, right? Now, I want to talk about, say, on the 15-minute chart specifically, MACD crossovers, right? You can also take small bounces throughout the day, guys, on any coin. You would have bought it right there, and you would have sold it on the positive side right there. You would have bought it here, you would have sold it right around there, right? So this maximizes your profit as well, once again, just to make sure that you guys don't take profit too early. And you might lose on some profit, but the most important thing is it protects you from making stupid decisions of taking profit too early. So here you would have made a 1.52% scalp, right? That's okay. 1.52% scalp only. For example, here, right? It bounces off of the 55 EMA, right? And it crosses over on the positive side. It actually crossed over well before already. So crossover to the positive side was pretty much right there. And the crossover right there, okay? When I'm talking about a crossover, if I wasn't clear, okay, I'm talking about the blue line, okay, moving downwards and below the 26, right? Make sense, guys? So to be clear again, I'm talking about the blue line moving above it, right? So the blue line was below, 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 and the red line was above, above, above. But now the red line becomes below, below, below. And the blue line becomes above, above, above. Okay, so that's what we're basically talking about when it comes to crossover. Sorry if I wasn't clear about that. I should have been very clear about that at the beginning, right? So now you could have entered a short position, I guess, from here, right? Yeah, a lot of people would have entered a short position, I think. Like let's just say crossover from there, right? You entered a short around here, right? But the thing is, the MACD is definitely high, right? But you're not going to win every single trade, right? Like this trade would have been literally broken even right here. You would have bought right there, you would have sold right there. That's a pretty break-even trade right there. So let's just say right now, let's say you go to any coin, guys, any chart. Okay, let's go to EOS right now. Let's go to EOS, and we're going to say to ourselves, all right, we're going to buy on the crossover. And we're just going to hold this guy, okay? Where is it on the negative side? Crossover, right? Here, guys, no, you don't buy things at the, you could have if you wanted to here, but no, it was kind of obvious EOS was just going to reach very low points. It needed some fundamental time, right? Lots of time to develop itself fundamentally, and it needed to talk a lot more about its ecosystem and what it's going to offer. So, and usually at the beginning of whenever a coin is offered, I don't buy it, guys. I wait for it to be literally on the negative side, right? If you bought it here, right? If you bought it here, most people could have. Make sure you guys are sticking to your stop losses as well, okay? Because guys, there's no guaranteed trades, I guarantee it. And I know for a fact that a lot of you guys would have entered this trade here. In fact, I might have as well, right? But I don't see any reasons to enter because I don't see any type of bullish signs of divergence, but we haven't introduced that yet. So let's say that you're anticipating crossover there and here. You guys would have got stopped out so fast here. So make sure you are sticking to your stop loss, right? You would have entered a long position pretty much right here, right? And you would have set your stop loss to the previous swing low. So you might have lost a lot of money on this trade, like 10%. That's what it actually worked out to, just a tiny little drop there. But I would honestly, sharpen up your stop loss to a lot lower than that, right? To pretty much like super small, like 2-3% there. So let's just say you take a look at the next crossover now, right? So crossover a little bit, boom, you got stopped out. So the next crossover is right here, right? Right there. Now we can see bullish signs of divergence, definitely on the RSI and on the histogram as well. We're starting to see it definitely tick to the upside, right? Here, guys, I don't want you guys to be confused. It definitely ticked to the upside, but right, you got stopped out. Unfortunately, not every single trade, if you adopt a strategy, will actually allow you to be successful. Only some of the trades will be. But once again, we try to trade it like a casino. And if we trade it like a casino and focus on these high probability setups, then you guys are definitely going to be more successful over time and have a much higher win rate as well. So let's say you enter this trade right there, right? And now we never actually see a crossover here. Take a look. We never see a crossover here at all, right? In fact, the opposite, okay? In fact, we see the opposite of it entering of it breaking out right here. Take a look. Take a look right there, guys, right? It's fanning out. So you literally entered the position right here, okay? You would have set your stop loss for around I'm trying to find the tool. Right here, right? You would have entered the position right there. You would have set your stop loss for right there. Okay. And then you would ride this thing, guys. You'd ride it hard. And you'd look for the next crossover, okay? On the histogram. Where's the next crossover? Where's the next crossover? Almost, not quite. Almost, not quite. Almost, not quite. Right? Almost, not quite. Right? Not quite, guys. So what you'd want to do now is sell it at the crossover right here. So I'm not sure if I said this one, not quite, but this one is definitely the one that you want to sell it at, right? So let's just say now you guys have successfully rode it to this particular point right here, guys, okay? Yeah, you could have sold it at this $12 something range, but what if it got up to 20, okay? What if it got up to 20? So the MACD crossover is definitely a great strategy for you to use. And guys, you would have made yourself, I don't like to draw that tool actually. You would have made yourself a ridiculous profit there. Like, geez. Yeah, I actually rode IOTA from like $1 or something to pretty good, I guess. I've been playing a lot more bounces on sorry, not IOTA, on EOS. I was playing a lot more of the bounces. One of my friends, Nick, I think he's obsessed with EOS. He loves EOS. I know you're watching this video right now, Nick. But yeah, Nick loves EOS and he had a great time trading as well. He's an awesome guy. I definitely want to hang out with him soon. He's from Vancouver. We've been meeting to meet up for a while now. He just picked up like a McLaren 720 or 720S, right? So it's pretty cool. It's like a good supercar. It's only like 300 grand or something. And I'm actually gonna pick up an Audi R8 this year. So an older one though, because I kind of like the older styles in terms of like body kits and what they offer as well. And it's a little bit cheaper as well, right? So hopefully I can go visit him during the summer as well. I think this might have been one of the only times where I've actually sidetracked and have not talked specifically about this only, but since we're talking about EOS, right? So you guys would have rode this thing, you would have bought it literally right right here pretty much, okay? You would have bought it right there and you would have sold it where it crossed over right there. So that would have been around the right there mark, okay? Yeah, that would have been the mark right there if you followed this strategy of just moving averages. Yeah, yep, from right there, okay? Oh, sorry about that. Backtrack a little bit, guys. Backtrack. We're not talking about that one. We're talking about this one right here, okay? You would have made yourself about an $830 profit there. It's just $830. So you bought it around, said, where is this at here? Let me just double check. It said $1.25 and $832. Okay. So let's just say you bought it at $1.25 and you sold it at $832. Okay. $8.32. Let's just say you only bought 1,000 coins, which is a $1,250 investment, right? You would have made, and your stop loss was about 1.2. Well, it wouldn't have been a 141 to 40, like 141 risk to reward ratio. We don't have a defined target yet, so that RR ignore it. So you guys would have made yourself a 565% gain roughly, okay? And you would have made about a $7,000 profit where you're risking literally 50 cents. It's not really that much, right? So yeah, that would have been a phenomenal trade to take, obviously, right? So where would you have entered it again? Okay, that's a big question, right? You obviously closed your position already. Where would you have entered the trade again? Well, guys, where you would have entered it, honestly, okay, think of it like this for a moment, okay? You see the 55 moving average right here, right? Let's just move this back a bar. Now, I want to implement even more things for you guys, right? Here, you would have anticipated the crossover happening. You would have only seen this. You haven't seen a crossover yet, right? So then, because you're anticipating it, well, guys, look at this long candle right here, okay? Look at this long candle that completely rejects to the bottom side. We're talking about, I remember that day as well, guys. Like, I remember it was a huge day, right? Super huge rejection to the downside. But EOS was one of those coins like Ripple that ended up skyrocketing even though Bitcoin was still correcting, right? So because this rejected to the downside, I would have bought it honestly on a breakout again, okay? On a breakout kind of above these points. I would have been interested in it right around here above the wick, bam, I would have bought it, okay? And then I would say to myself, okay, I want another crossover to happen. Okay, another crossover to happen on the positive side. But if we're looking at a crossover from the positive side, we also have to look at, say, histogram, right? We do see the histogram bullishly gaining, right? We say to ourselves first, okay, this one right here is rejecting the 55 EMA. We're getting a series of higher high candles right here. And in this cluster region right here, it actually formed a pretty solid resistance, right? So we're going to say to ourselves, how's the histogram looking? Are we going to get a MACD crossover as well? Are we gaining strength in the market from RSI? You guys don't know about that yet. We're going to talk about that in the next one. And the answer is yeah, there's a crossover happening soon. Yeah, the histogram is actually positive. It's breaking up to the positive side soon. Most likely this is going to break, right? So if this does end up breaking, right, guys? If this right here ends up breaking right there, you would have bought it on the breakout, okay? Now, how much longer can you ride it? Let's just say you're using the same strategy now to sell it on a crossover again, right? Well, you would have sold it right there, and you would have literally would have broken even, right? You would have literally broken even. So how do you tell when to actually sell, right? You want to anticipate it as well. You want to use different time frames as well. Let's say now we go to a 4-hour time frame, okay? We go to a 4-hour time frame on a smaller time frame. So that's where we were on that crossover. But have you guys noticed on a 4-hour crossover, it's actually well before on the daily one? Well, what you're noticing now is on the 4-hour crossover, it crossed over hard, okay? How would it look on a 2-hour? Watch this, guys. It's going to blow you away because of how much we could have anticipated that crossover even sooner, okay? Now look at this, okay? Now look at this on a 2-hour. This is the daily, this is the 4-hour, and now we're going to take a look at it on the 2-hour chart. Where's the crossover? Right here, right? So then you would have actually made even more profit. If you had sold it on the day-to-day, breaking even. If you had sold it from buying here on the 4-hour chart, you would have actually made less profit. But if you sold it and closed it on a lower time frame because you were expecting a crossover, it's simply too high and completely overbought with RSI, then you would have bought it. You would have bought into a position. Actually, it was right here. Was it? Let me double check. No, it was this one right here. My bad. Yeah, so you would have bought on that breakout right over here, right? Which was that candle, right? And then you would have actually rode it to about this price point right here, right there for an easy 50% gain as well. So as you guys have noticed that this strategy, the 55 moving average strategy with the MACD is a really powerful tool, guys. It's so powerful. And honestly, you can use it on any time frame as well, right? Let's just go to IOTA for fun here. Let's go to a daily chart first where we like to buy it on a daily crossover. Let's just take a look at some here. Right here, you would have bought it, definitely. Right here, let's just say at the beginning of the time first. Here, completely over sold already, okay? So it's also bullishly diverging. We got a crossover here. So that's the one that you definitely want to enter a trade, right? So now we're going to look at this crossover here because we found other reasons to enter as well, okay? Now we're going to say to ourselves, we're going to sell it when it gets to near the MACD crossover. So that's the MACD crossover on the daily chart right there, okay? But have you guys noticed that it's a little bit too late? You would have sold at 83. You would want to sell it like, you know, closer to there, right? To the top. So as you actually start to see this downtick right here on the histogram, please remember this. Make sure you remember this. As you see this negative, not negative, but it's starting to slope down, right? It goes up, boom, spike on this little guy right there, and then one tick down. The moment that you see that tick down is the moment that you change over to a different time frame, okay? Now we're going to go to a 4-hour time frame, and so this second yellow one right here, I should probably make it a different color so you guys remember it. I'm just going to call it green, okay? I mean, this one is green, right? That's where the histograms start to tick down. Let's go to a 4-hour chart now, okay? We go to a 4-hour chart and watch this, guys. Okay, we go to a 4-hour chart and see this green right here. That is where it started to tick down on the histogram right away, right? So if you actually went over to a 4-hour chart, you technically would have sold it right around here, right? So you actually could have caught the top as soon as you notice that daily was starting to tick down a little bit as well. So that's how we're finding a lot of these confluent reasons. So once again, guys, you just have to make sure you're practicing every day. These skills don't come naturally, right? It's like trying to figure out a jigsaw puzzle, but you can never complete it. You just get closer to completing it, but you actually never do. That's kind of how I see trading. I see it as a very complex type of puzzle that I just want to solve, right? I just want to find more reasons why I firmly believe it'll lean towards one way more than the other way. And once you find a lot of these reasons, you guys have no idea what kind of trader you guys have the potential to turn into. Guys, when I did this, can you guys imagine, like, I didn't have a lot of money when I started doing this full time. Trust me, guys. All of my profits have been made in 2017. In 2017, I have made more money in my lifetime than in that 1 year than I've actually made in my entire life. Okay, so 2017 was kind of my year, and it started to really take my trading to the next level, to the point where you guys see what I'm doing now, right? And I just really know and I believe firmly that everybody who's watching my video right now and everybody who has purchased this content, you guys need to put in the hard work like how I have. I went to school for 7 years, guys. 7 years, okay? And I kid you not that in my 3 years of trading, 1 year of heavily trading, 2 years of just swing trading part-time, right? So in my 3 years of learning how to trade, I have put in more tears, blood, and sweat into these 3 years alone than in my entire 7 academic years. I should probably say the past 3 years, I've put in more work and effort into learning how to trade than how to be successful at trading than everything in my life combined, I bet. Honestly, because I thought to myself that I value myself, guys. I really respect myself. I value my time. And this is really lame to say, but we don't have a lot of time, guys, right? I mean, why do you want to spend 8 hours a day working for someone else? Why do you want to spend 50 hours a week working? It makes no sense to me, right? Why not just have a comfortable job, make enough just to make you happy? Everyone's price point, everyone's magic number is different, guys, right? Mine's really low. I'm a very simple person. I don't buy nice things. I don't really buy nice cars. I don't really spend everything on my home or a condo, whatever. I don't splurge. I don't party. I don't go out. I don't drink or anything like that. So I'm a very simple person, right? And I'm happy where I am right now, and I just really want you guys to get there as well. And I firmly believe that anybody who studies hard and puts in a lot of effort is going to be successful in trading. And don't ever be discouraged, guys. Like, don't ever be discouraged. Always believe that every time you lose a trade, you have the mentality to succeed. Because if you want to be the definition of success, know how to fail, right? You got to know how to fail gracefully and humbly. But it's not how hard you fall, it's how fast you can get back up. So if you lose a trade, please remember and keep in mind that it's only going to thicken your skin, and it's only going to add valuable experiences and lessons under your belt. And this moving average strategy, you guys are going to see it used a lot more. Try it on any chart, guys. The moving average strategy with the MACD crossover as well. And histogram, use it as a gauge, okay, of when it's actually ticking up and down. You guys can clearly see that right here, it's ticking upwards, right? So when it starts to level out on the bottom here, right, when we reach the next tick up is usually a good sign, because we don't see any tick ups, right? We just see down, 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 and then up, 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 right? So if you guys look at it right here, even, right, it goes down, 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 then up, 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 up. Well, it goes, down, 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 and then it goes up, 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 up. So even if you trade on the histogram alone, you can be successful. Buy it at the bottom of the histogram, even you can do that. Sell at the top of the histogram, right? It's pretty easy to do in my opinion as well. Let's just say you actually bought it right here at the bottom of the histogram, okay? And you sell at the top. Buy at the bottom, you sell at the top, okay? So here you still would have made a very decent profit if you just did histogram trading alone. You would have made yourself 15%, okay? And now it went down again. Buy at the bottom of the histogram right here, okay? Right there, right there. Sell it at the top of the histogram like that. So then you'd be entering a trade at the bottom of the histogram. Then you just made 50%. Cool. All right. You now enter short position at the top of the histogram, and then now you close your position at the bottom of the histogram, right? All right, well, you just entered short position. You just made yourself 34%. It's kind of funny how you could do this all day and you actually will be profitable. Try it. Backtrack. Test it. Just test me, guys. See how the strategy works. You could buy at the bottom of every histogram and even sell at the top of every histogram. Just pretend you're playing with $1,000, do the percentage gains, and let me know how you guys actually see the math. I've done it, guys, for the past 3 years of Bitcoin, believe it or not. I have statistics. If they were in binders, they'd be this thick, full of Bitcoin. Okay, they're not that thick. It's probably about, I was gonna say 200 pages, but that'd be lying. Maybe about 80 pages of just data that I've collected over 3 years. And trust me, the moving average strategy is so profitable, and I've tested it on it. And Litecoin too, guys. Litecoin and Ethereum. Whew. Those three coins are they love moving average strategies and they love MACD as well, and they're really good signals. So, anyways, I'm more so just rambling at the end of the video. I hope that you guys have enjoyed this particular video because it's definitely one of my favorite lessons. Just talking about the MACD and histogram indicator in general. So I think that it's definitely one of the most powerful indicators, especially when we combine it with RSI. So I think we're going to conclude lesson number 13. I've definitely gone well over an hour for this lesson. I hope that it has been very helpful. I hope that it has added insight to your trading. And just a very quick, excuse me there, I burped. Or hiccuped rather, that was kind of rude, I didn't mean to be. The MACD and histogram is basically the moving average convergence divergence. It takes a sample of the previous price action and it's a lagging indicator, and we like to buy it when it crosses over, and we like to sell it when it crosses over as well, right? And the histogram is a way for us to gauge like a staircase if it's going up or a staircase if it's going down. And usually we reach like a plateau, right? It rounds off at the top there, and when it rounds off at the top, there's a good chance for it to actually come down. So we'll be sure to introduce a lot more theory as well. Lesson 14, 15, and 16 and 17 will be very, very intense, okay, guys? It's stuff that I'm not releasing to the public at all. Yes, I did make a Fibonacci retracement and extension video, but you guys have private rights to these videos and exclusive access to them because, well, you paid for them, right? I'm not going to be introducing these theories to the general public. It's just for you guys because you guys are, well, I guess you can say my students, right? So please make sure you're reaching out to me on Udemy here. There's a question and answer place, guys. Reach out to me. Ask anything you want. Ask anytime you want, and I'll be sure to reply to you guys as fast as I possibly can within 24 hours. And I hope you guys have enjoyed the lesson once again. I really hope that everything has been so helpful so far, guys. I genuinely want to hear about a lot of success stories in a few months or years from now. And I want to show you guys proof in the pudding, and that I just don't, talk the talk, and I actually walk the walk as well by showing you guys a lot of my live trades, right? So I will see you guys for lesson number 14, where we will talk about one of the most powerful indicators, the RSI, Relative Strength Index. And you guys have seen me talk about it and tweet about it all the time. And in every single one of my trades that I tweet there to show you guys my profits, it's always about the RSI and nothing else really, right? So when we start learning about the RSI, it's going to blow your mind how awesome it is and how well it's going to incorporate into your day-to-day trading as well. So have yourselves a great day, guys. Thank you very much for being a part of my lessons, and thank you very much for enjoying these videos if you have. I appreciate all the love and the support you guys have given me. Bye now. Take care.